What's going on, everyone? It's your boy TeflonJohn coming to you courtesy of the I Am TeflonJohn brand and the Art of Reinvention podcast. Have you thought about buying a home lately? Are you on the brink of buying a home? Are you in the process of buying a home? Well, great, because tonight's live video is called The Home Buyer Guide. And what we're doing is breaking down details and information that goes into buying a home. And look, for those of you who do not know who I am, this may be your first time tuning into this broadcast. My name is TeflonJohn, and my goal is to motivate you and inspire you through provoking thought and giving you education and empowerment. And like I said, tonight's video is going to teach you how to buy a house. And I encourage you to go ahead and share this broadcast. The bottom left side of your screen, go ahead and share this broadcast. Throughout the broadcast, if you have any questions, leave it in the comments section and let me know how I'm doing. And let's always say, one love, be blessed. Go. Hey, what's going on, everybody? It's your boy TeflonJohn coming to you courtesy of the I Am TeflonJohn brand and Define Fog Realty Company. And tonight we have a power-packed episode called The Home Buyer's Guide. And I have a special guest with me. We got my best friend, Scotty Booker. So I'm going to let Scotty introduce you, and that way you can kind of learn more about him.
My name is Scotty Booker. I've been a real estate agent for over a decade now. I'd say probably about 4 years ago I became a real estate broker, got my broker's license. And about a year ago, well, not quite a year, about 8 months ago, I started my own brokerage, and I'm excited about it. We're growing quickly. I mean, we are the fastest growing real estate firm in our area, and so we're excited. I'm excited about doing this with you, and so hopefully we can help some people about, just learn a little bit more about the home buying process. So I'm excited, man. Thank you for having me, sir.
Yeah, man, anytime. And hopefully this won't be the last time I'm going to have you back on. So we're going to dive straight into it. So let's start off with reasons to own a home, renting versus buying, because you hear this a lot. You hear a lot of conversation, and some people are renting for too many years. Some people are wanting to buy, but they're afraid because of the market. Could you break down the difference, pros and cons?
Yeah. So we got a little saying. I'll kind of start with this. It says, if you're renting, you're paying someone else's mortgage. Simply put, you're paying someone else's mortgage. Wow. If you're owning your home, you're paying your own mortgage. The renting versus buying, I mean, I would say in 2018, it is by far cheaper to own a home than it is to rent in 2018. The times have changed. Rents are really going up. But I would say my number one reason to own a home versus renting is building wealth in a passive, in a passive kind of way. You own a home, just say for instance, you own a home for 6-7 years. Typically on average, you're going to get about 7 to 8% appreciation each year. So doing the math, if you bought the house for $100,000, in about a year, it could potentially be worth about $107,000. 2 years later, maybe $114,000. And so homes are appreciating about 7 to 9% in this time. So you're building equity. That's kind of an internal rate of return. You're just paying the bill and the house is appreciating. But while you're doing that and the house is appreciating, you're actually paying down the equity in the house. And so the difference between what you owe and what your house is worth, that's equity. That's typically like money in the bank,
Gotcha.
And you got to pay to live somewhere. So why not own your own? So I just believe in it. I think it's the American dream. It's our motto and it's our company motto. We believe that everyone should own a home. So.
Gotcha. Okay.
Absolutely.
Now I have a side question with that because, we talked about equity, we talked about passive income, building wealth, something that has value. Yeah. Now, what is your advice to some of those people who will, pay $400 to $500 a month in rent, but yet they're paying $900 a month for an SUV just to have for a status symbol?
Yeah. When you're buying vehicles, they are depreciating in value from the moment you drive it off the car lot. They're depreciating in value. And so, if you keep that vehicle for the entire term, whether it's 5 years or 6 years, because they do the 6-year loans now, by the time you finish paying for that vehicle, you're pretty much upside down on it, somewhere in the middle. You have to pay it off to get anything out of it. And so it's a depreciating asset. And so I guess you would say in your asset column, you're putting all that money into something that's going down. And so versus home ownership, like I said, I mean, historically, if you really think about, I mean, there's neighborhoods in Forest. I have a gentleman that goes to my church. He paid in 1980. He paid $40,000 for his house.
Wow.
He's lived there 30 years. His house in 2018 is probably worth about $220,000.
Wow.
And so, and just think about that car. If he'd have bought that car in 1980, what that car would be worth in 2018. So, to me, it doesn't make any sense. So
it's kind of upside down.
Yeah, absolutely.
Okay. Now, one thing with the I Am TeflonJohn brand that I preach is fear. Walking out of fear and walking in faith. Yeah. And it goes into our next question, because if you watch the news, it's always the market. Yeah. Why? Or can you give me some reasons, or give our audience some reasons on why it's a good time to buy now?
Right now is a good time to buy, even though it is a seller's market. What's happening is interest rates are still at historic lows. I mean, right now I think they're averaging about 4.4. And even though they went down to, lows that we've never seen before, and they've crept back up slowly over time, it's still a great time to buy. Because, if you think about the interest rate in itself, that's going to be your payment. That's what you're going to, your monthly payment is what you're going to fit into your budget. And when you compare what you can get on 1,000 square feet, or something that's nice, something that is worth, something that you can be proud of to live in, $1,000 payment on an apartment versus $1,000 payment on a house. Yeah. It's a big difference in 2018. So to answer your question, what was your question? I apologize.
The question is talking about why is it a good time to buy now?
Good time to buy because the interest rates are still at historic lows, and they're creeping up because the economy has changed. No matter what we believe or what's going on in the world right now, our economy is the best that it's been in years. Wow. And so the market is responding by slowly creeping up the interest rates. We don't know how long they're going to be this low. So what you can afford today with that interest rate, which determines your monthly payment at a 4.4, if that interest rate gets up to a 6, it affects your buying power. Wow. So you cannot afford the same amount of house with a 6.6 interest rate or a 7% interest rate. And I do believe that I've heard from a lender that they expect the interest rates to be about a 6 by the end of the year. So
wow. Okay.
And I guess to make it plain, $120,000 house, the difference between a 4.4 interest rate and a 6 interest rate, that is probably like $300 to $400. Wow. Same house, but different payment because of the interest rate.
So $300 to $400 added on top of the payment?
Added on top of just because of the interest rate. Because of the interest rate. Same house, but different interest rate.
Gotcha. So it really is a good time to really get in and buy if payment is an issue. It really is a great time to buy. So when we're talking about our reason to buy, renting versus buying, and we're talking about the interest rate is good. Mm-hmm. So for those that are watching that are like, man, okay, I'm convinced. Why should they work with a realtor instead of going online and shopping themselves?
Yeah. Well, I don't discourage anyone from beginning the process online, because it does, truth be told, we're in a technology age. You can open up your telephone and you can potentially do, with these video tours, and you can do a whole tour of the house online. The importance of dealing with a real estate professional is because you need someone negotiating on your behalf. If you're negotiating on your own, just say with the seller of the home, a lot of times, how can you really, tell someone you want what they got, and then you have to critique it going down the line. You find something wrong with it, so it's a very uncomfortable situation. Gotcha. It's one of the most litigated things in real estate when there's a for sale by owner transaction, because a lot of times the proper documentation is not being implemented. You need a lead-based paint disclosure. You need a residential property disclosure. You need to know whether that house was built before 1978, you need to know whether that house has lead-based paint or not. And so a lot of times it's just, we have, in 2018, we have access to a lot of data. But how to apply that data, you need a real estate agent to stand out and represent you. So after you write the contract, and then you got to deal with the home inspection report. The home inspection report, just say for instance, y'all come to agree on terms and price, and you like the house, it's beautiful and all of that. You write the contract, and then the foundation is about to fall down, or the roof or the heat pump is about to fail. You can hire a professional home inspector, and he'll tell you that. But then now you have to negotiate with the owner about these different items. It's just a very uncomfortable situation. So you need a professional looking out for you, telling you what the laws are, orchestrating the home inspection, setting up closing, preparing the title search. For sale by owner is one of the most dangerous things you can do. I believe that. So.
Gotcha. So it sounds like to me that getting a professional in, it gives you a peace of mind. And not only that, I couldn't imagine me working my job, my wife working her job, us having kids going to practice and having to do all of that and making sure that it's proper. All the I's are dotted and T's are crossed. So let's say someone's ready, we got a professional now. Our next component, I think, is one of the most overlooked components when it comes to life in general, but especially when buying a house. How important is your credit score when it comes to this process?
Credit score is very important because credit score determines your interest rate. The higher your credit score, the lower your interest rate is going to be. We have a bunch of different loan products. We have a FHA loan, which is usually about 3.5% down. We have a VHDA loan, which is that's a FHA first, that's a VHDA. What they do is they'll do a second mortgage so you can actually buy with 100%, no money down, with a VHDA. With a VHDA loan, because you're not putting any skin in the game per se, they require that your credit score is higher. You need about a 650, 660 or so to even qualify for that particular loan to get the 100%. And so credit score, it determines whether you can qualify for a loan or not, or the interest rate, which determines, as we discussed earlier, the monthly payment. So interest rate, credit score is very important. And then that's another reason to engage a realtor, even though we don't handle the loan per se. We can kind of lead you down the right path to plug you in with that lender, because there's a couple lenders that we deal with that actually have credit repair. They'll plug you right into a system, and it's sort of a online computer generated where you do have access to a professional, and they give you a strategy for improving your credit.
Okay.
And like I said, it determines your buying power, but it determines your interest rate. So it's very important. Credit is very important. But you can't let that deter you, because you only really need about a 620 to qualify. You can do some with 580 if you got money in the bank.
Okay.
But it definitely determines the amount of house you can afford. So very important, yeah.
Gotcha. And what's crazy is you compare yourself to see, hey, well, the Joneses got a house paying $1,000 a month, and you try to do the same thing, or you could actually get a house cheaper than the Joneses and pay more per month because your interest rate, they're considering you a high risk, right?
Yes, they consider you a high risk. And then a high risk because you have, they can qualify you up front because your credit score, but then they look at your habits, like the SUV with, and how you've paid that payment, how you've paid your credit card payment, all of that. So they can look at your history, even though your credit score may be up, your history could disqualify you. So, one of the first things we do when we get people in our office, we tell them, we talk about credit. We talk about debt to income ratio, and we may talk about that a little bit later, but we talk about those things because we want to know how much house you can afford, and then we want you to put yourself in the best position possible by having the highest credit score that you can have. So.
Gotcha. And it's funny that you mentioned the debt to income ratio, because I know with my story, I was denied financing for a car. Then I could get it, but it was going to be extremely crazy payment.
Yeah.
I'm like, nah. And that actually got me on the path to actually care about my credit, do research, get with a credit repair service, and my credit score went from like high 590s to mid 700s.
Wow.
And one of the main components was debt to income ratio. So can you break that down and how important that is?
Yeah. All right. So there's a couple things that play into the debt to income ratio. If your credit cards, and let me just chime this in, if your credit cards are above halfway or you got them maxed out, that does affect your credit score. You could be paying them on time, but you're maxed out. That is going to affect your credit score. Also, because that payment goes higher with the amount of money that you have used, it's going to affect your debt to income ratio as well. But generally, debt to income ratio, when you come in and you want to qualify for a loan so you can find out how much house you're going to buy, the debt to income ratio is as important as your credit score when determining, whether you can afford a house or not. Because what they're going to look at, and they got different percentages, like I think FHA is about 43%. And what that means is if, you got $1,000 worth of debt in a month, you're paying out $1,000 a month, but you're only making $2,000 a month. That puts you at about 50% debt to income ratio. So your income is $2,000, your debt is $1,000.
Gotcha.
Based on that formula right there, if you're already halfway at 50% already, when you come to buy a house, most likely you're not even going to qualify for a house. Gotcha. Because you're already at 50%.
Gotcha.
And so like in terms of you have to get the amount of credit, you have to get that down so that you can afford a house, because that $500, it fits. What they do is they fit your proposed house payment into your ratio.
Gotcha.
So if your house payment is going to be $1,000 a month, that they factor that into your budget, and
gotcha.
that determines on how much house you can afford. So, absolutely.
Well, that could be a good thing, because I believe that with somebody finance, at one point when we were in like the credit crisis, people that couldn't qualify, for say a $250,000 house at $1,200 payment, they were given the loan, and within 6 months the bank was taking the home back.
Yeah.
So that's one good thing to look at it. That hey, look, if it doesn't make sense on paper, you want to live in a house, not buy a house and you're working 2 to 3 jobs.
2 to 3 jobs, yeah.
So,
and you're absolutely right. And just to chime in on that, during that credit crisis, they were doing exactly what you said. They had these what was called ARMs, and those ARMs were in the first 2 years. They were just lowering. They had this really low interest rate to get them into the loan. Didn't have to put no skin in the game or anything like that, and so anybody could qualify. Houses were selling very fast because everyone had access to debt, and so you could buy a house. But after that 2 years was up, then here comes this ARM, which is this adjustable rate mortgage. It adjusted where you may have had a 4% interest rate, and then it kicked over to a 7%.
Wow.
And like I told you earlier, your payment goes up. Same house, same amount of debt, but interest rate changed, and some people's payment jumped. $300-400, and I owned a rental property at that particular time, and my payment jumped up about $200, and
wow.
And I had a tenant in the house, but it affected very quickly what I was getting, because I think I was probably about breaking even at that point because I didn't understand what an ARM was, and so there was a lot of things have changed a whole lot since then. A lot of the paperwork during that time, people wasn't even reading it; they was just kind of signing up, and they were just passing out. They were just passing out loans everywhere. So times have changed, but it's just a great time to buy, man. So yeah.
Yeah. So talking about the debt to income ratio, and we're talking about credit,
Yes, sir.
and I know like a lot of people are deterred from starting the process of going from renting to buying because they feel like I don't have any cash. I got to put $20,000, $10,000 down.
Yeah. So
So could you go over ways that they could actually, work on owning a home or get into that process with little to no money?
yes. So the government has programs that they put in place, one of which being a USDA loan. If you're not buying inside of the city limits of, in this case, Lynchburg, Virginia, inside the city limits, everywhere you see city of Lynchburg, if you're buying outside of the city limits and you qualify, you can qualify for a USDA loan. That's a rural loan. It's issued by the United States government. That loan is 100%. It's you have to have no money down. So as long as your credit score is about a 640, I believe, you can actually come talk to a realtor. As long as your debt to income is in place, as long as you have a job where verifiable income, you could qualify for a USDA loan. So that program is 100%. That's actually no money down. I mentioned earlier we were talking about a VHDA loan. That's another government loan. That's the United States government and the Virginia Housing Development Authority, which is the Virginia government. And that loan is 100%. It's two loans wrapped in one, but that's a 100% loan as well. And then we have an FHA. The FHA is a 3.5% down. Just to give you, I guess we can base it on $100,000. That'll be about $3,500 down. That loan you can buy inside the city of Lynchburg, or you can buy anywhere you want to with that particular loan. Okay. There are guidelines with all of these different loans. Some of them, I think the USDA, you can make too much money for that particular loan, and VHDA, you can make too much money for that loan. Gotcha. But then they have some local banks have some loans where, if you got, I think it's an 800 credit score, they have, and you're buying a certain amount. I think it's 400,000 or something. They have 100% for those programs as well. A VA, if you're a veteran, you ever served in the military, they have a VA loan, which is actually one of the best loans that you can get. United States take care of the men and women that served. And I always get it's always a great feeling to sell someone a house, that has served in the U.S. military. But that particular loan is 100% as well. And you can buy anywhere with that. And they guarantee the lowest rates. They give their veterans some of the lowest rates that exist. So there's a lot of different programs. If you don't have a lot of money, you can still buy a house with relatively no money down. So
okay. Yeah. Okay. Now going on to our next point, because we went over the whole process almost. Mm-hmm. We went over the debt to income ratio. Mm-hmm. We talked about the credit. You mentioned down payment. Now, to me, it's kind of confusing, which I'm glad I have you on here. Okay. Because I want to really go over down payment versus closing costs, like what are they and how they affect the loan and your payment.
Okay. So down payment is because you got different loans, and like we discussed some of the other ones. They're also what is called a conventional loan. A conventional loan, they have conventional loans with 5%, conventional loans with 20% down. A down payment is actually going towards your purchase price is $100,000. A down payment is going strictly towards the equity of the property, and so the bank would only be financing the difference between what you put down as far as purchase price is concerned. Based on $100,000, say the purchase price y'all have agreed. We got a contract for $100,000 to purchase this home. The money that you put down goes towards the equity of the property, goes towards right into the purchase price. If that's $5,000, which is 5%, then you're only financing $95,000. Closing cost is something totally different. Closing cost is actually the cost of doing the loan, and this is where there's a little confusion. And our office just dealt with something just like that, and it just so happens to be a for sale by owner. And but what happened was they put an offer in on the property. They knew that the buyer qualified for this certain amount. The closing cost was not included in the deal, and then they found out that they had to bring an additional about 5% to the table, because closing costs are typically 3.5 to 5%. What we do, you structure the offer in such a way that the seller pays for the closing costs, and so if you wrap it into the contract and write the contract correctly, you do not have to pay out of pocket for closing costs. Some of the things that the closing costs consist of. There is the lender takes a percentage of the loan. They typically charge maybe 1% or 2%. So on $100,000, their cost is about maybe $1,000 to $2,000, and that just goes straight to the lender. Okay. So that's part of the closing cost. You have an appraisal fee. If a bank is going to lend on anything, they want to determine the value. That appraisal is going to be anywhere from $550 to $600 or so dollars. That gets that goes towards your closing costs. And then you have title search. So your title search, and then you have to pay the attorney. The attorney, they charge a fee for doing the title search, preparing the documents, and all of that. So all these fees that's the cost of doing, because even though you could be purchasing the house for 100%, that closing cost, those are the fees that have to be paid by somebody. And so another reason to go back to what we were talking about, the importance of using a realtor, we would actually structure the deal where those closing costs are wrapped into the loan, and so you can still come to the table, even though that's an additional 5%, 3 to 5%. That's not going towards your. It's not going towards your principal. It's not going towards bringing the that payment down. It's just the cost of doing business, and so that's a great question. It's one of the things that we have to explain a lot of times to first-time home buyers, but typically closing costs run anywhere from 3 to 5% of the total loan, depending on what type of loan that you're using. Yes.
Now, have you ever saw like something disappointing, like you see a couple, a married couple that doesn't know, maybe didn't go through a realtor, they got the down payment, they got everything going, and the deal falls through because they can't afford another $5,000 to $8,000 out of pocket on top of that 3.5% down, because they didn't know, like, they were going to get hit with closing costs.
Absolutely, I've seen it recently, and that's what I said. Our office recently had to deal with something like that. It was a learning experience for one of my agents, but the importance of what you're doing, here today, is the education process. Before you get into anything, you want to be educated, because you don't just go into something just assuming or just based on some information that you found online. You need to talk to a professional so that you can know that closing costs, once you write that contract and you're ratified and you got everything going, and then you got to come up with this additional cost that you didn't expect because you just thought y'all agreed upon price. You knew you had the down payment to qualify for this particular loan, but now here comes the closing costs. And I can tell you, actually, another for sale by owner, probably about 18 months ago, I actually had to come in and clean up this particular mess that they made, because they agreed upon a price. And it was one of my former clients that tried to sell the house on his own because he didn't want to do the work to it. And so he just kind of put it up on for sale by owner site because he knew he had some work and he was going to kind of see what happens. And he got himself into a situation where they agreed upon the price, and now this buyer who thought he knew everything, he needed $8,000 in closing costs.
Wow.
Wasn't written in the contract or anything like that, and so he expected the seller to pay it, but it wasn't in the contract. But he had the money down, but he didn't have the down payment. And so it was a mess. And I actually had to come in and clean it up. We had to make some adjustments to the contract.
Wow.
But I would say, that question is a very, very important question. Closing costs, what are closing costs? If you're working with a realtor, if you're thinking about, buying a home, these questions right here, they're very important, because it could come back because that deal literally almost fell apart, because of closing costs. So,
wow.
and then the recent deal fell apart because of closing costs. So,
Gotcha.
Absolutely.
Gotcha. So, when it comes to buying a home and when it comes to all the details that we gave, right, I'm pretty sure there's a lot of people that are under the sound of our voice that are watching our live video that may be ready to reach out. How do they get in touch with you or any of your agents?
You can call us at 434-237-3777. Once again, that's 434-237-3777. Or you can go on our website, DivineFogRealtyCompany.com. I think we have probably about 12 agents right now. We're growing, and any of our agents, they'll be excited to serve you, or they'll be excited to hear from you. Matter of fact, if you're tuning in now, let them know where you heard about us at on the TeflonJohn show.
Okay.
And just let us know. And if you got any questions about this broadcast, reach out to us, because we don't just we don't have to represent you per se. We're here as a representation of Divine Falk Realty Company, and we take questions all the time that people that never do business with us, they just want to know. And so we don't mind sharing our information and what we know about real estate with you. So,
okay.
Absolutely.
Okay, and like I said, there was Scotty Booker of Divine Falk Realty, TeflonJohn, and we just want to encourage you to place some questions in the comments. And like I said, Scotty will be on. He'll be tagged in the post, so he'll be able to answer questions. Come out here, come and visit. He has a wonderful office, a nice staff. I've met them personally. Very knowledgeable guy. And like I said, that's the people that you want on your side, is someone that has the knowledge and someone that's not really invested the money. Scotty has a heart of the people, and he really wants to help because, most people I tried to reach out to either didn't return my call or they wanted to charge me for an interview. And I'm just trying to give value to you guys, just trying to give knowledge. The Bible says my people perish for the lack of knowledge. Absolutely. And I'm just trying to give you guys some information on one of the most important investments of your life is buying a house. And I know there's a lot of young couples, there's a lot of people coming out of college, that are looking to buy. And why not watch this video and learn? And I encourage you to share this with your family and friends that may be on the brink of buying or maybe just need some education on how to buy a house. So I'm going to end this, like I always said, one love, be blessed. Thank you, Scotty.
All right. God bless you. All right.
So are you ready to buy a home yet? Hey, I hope you enjoyed that power-packed episode with Scotty Booker. And all I want you to do is continue to share this broadcast. Give me some hearts. Give me some likes. And what I want you to do is place any questions that you may have about this broadcast. Place it in the comment section down below. And you can follow me at facebook.com/realteflonjohn. I appreciate it if you go and like my page. And you can visit my website and listen to all my podcast episodes at www.imteflonjohn.com. See you next week on our broadcast.